So Shrikant Shetty, Vice President at Motilal Oswal, is with us. He'll help us with the fundamentals, and Sameet Chavan, technical analyst at Angel Broking, will walk us through the technicals. Sameet, good morning. If I may start with you first, I just listed all these banking stocks, but that rally seems to be a very sustained rally. But sugar surprisingly has come back, and many of these stocks are in a freeze. Sameet, the question was for you.
Hello. Yeah, can you just repeat the question, please?
Right, Sameet, I said we've had a strong rally coming through in financial stocks, starting with Indian Bank, which is up around 8%. Your thoughts on the technicals of where the strongest stocks are, and sugar seems to have run into an upward freeze again.
Yes, banking stocks are doing well today, but if you look at the Indian Bank price structure in last few months, the stock has given a stupendous rally from low levels and is now trading much higher. If we look at the daily weekly chart structure, there is no major resistance as such, but from current level we expect another 8 to 10% rally quite easily, but fresh buying at current level would be very difficult considering the risk to reward ratio, but it is in a strong momentum, so those who have bought it at lower level, they should ride this trend, and this stock is likely to move higher now. It is likely to test its multi-year highs, so hold for Indian Bank. Just keep trailing your stop losses higher, and if you look at the overall banking index also, the bank nifty today itself has given a strong breakout from a major resistance of 19,050, 19,100. So from banking index also we see another rally at least towards 19,500, 19,550 in banking index. As far as sugar stocks are concerned, yes, after seeing a good rally, they have corrected a bit, which is quite evident after seeing such a stupendous rally. From this space, we like Balrampur Chini. It has been our preferred pick, trading around 113 right now. So any further dip, probably towards 110, 108 would be a very good buying opportunity. We are seeing a strong base around 100 rupees. So one can enter around this support zone, and 95, 98 could be a very good stop loss level, and on the higher side we expect the stock to retest 130, 135 in next probably couple of weeks time.
Right. One of the things that I've been mentioning is that in this rally, don't be tempted to be short because you will get trapped, and that's what's happening. Every time you try a short, see how quickly the market appreciates on the R side. So whoever or whatever has the money in this market is long on the market, which essentially means that they're on the buying side. Maybe they sometimes get you into a lull of believing it's not going anywhere. So you start thinking, okay, the market's collapsing. It's not. It's a very sustained rally. It's now starting to acquire all the ingredients of being a bull rally, and so you have to be exceedingly careful on the short side in a market like this. So just one quick question on Shalimar Paints. That stock has been on the roll even compared to other paint stocks, but your thoughts on its trend?
Yes, if we look at the trend-wise, the stock has been maintaining its upward bias since last few weeks. After a consolidation of nearly 4 to 5 months, the stock first gave a breakout from a major hurdle of 140, 145, and now after seeing a dip towards 150, the stock has resumed its uptrend. The stock is clearly heading towards 198, 200, which we are expecting probably in next couple of weeks' time. A dip would have been a very good buying opportunity, but the stock seems to have just picked up a strong momentum, and we expect 198. And if we look at the overall volume activity in last 5 to 6 months, it has picked up substantially. So any dip would be a buying opportunity. I'm not sure whether the dip would come or not, but the stock is heading towards 198 or probably beyond 200 also.
All right, Shrikant is also with us. Shrikant is, of course, with Motilal Oswal. Shrikant, if we may start with Indian Bank, what is the differentiator of this bank? Because its rally is even significant given the overall pace of all the public sector stocks.
Right, but see, as I said, it's an outlier. I mean, in terms of performance, it's an outlier. It's a company, the bank which reported a profit of 300 crore. It reported some improvement in the overall asset quality performance. So clearly, one is looking for slight improvement in the asset quality of these banks, because valuation-wise, most of the PSU banks have been trading at significant discount to books. So once you start seeing some improvement, obviously people will want to catch on it, and that's what is happening with Indian Bank. Clearly, there is a sign of improvement happening in Indian Bank. So that's what is a clear differentiator. If you look at SBI, I think that's another one where there's been not as bad as probably some of the other banks have come in. So SBI is another one which is doing well among the larger kind of PSU banks. So that's what is kind of differentiating the PSU banks. It's a primarily asset quality. Wherever we are seeing signs that these things are either reducing or some amount of change is happening, clearly people are going in and buying into these stocks.
Another stock that you had on your radar was Power Grid. And of course, Power Grid has had a very, very strong rally, even from a technical perspective, is a very strong stock. Shrikant, Power Grid is one of those businesses that are natural monopolies. I mean, you just can't replicate the network. So as the power needs of India grow, the Power Grid is almost your socket. It connects you into the producers and the consumers. How much uptick could then it have? Because there are very few businesses that can be natural monopolies, and Power Grid is one of those.
Right. The only issue, apart from being monopoly, is the fact that monopoly is a good thing, but then still the return ratios do not remain as great as some of the other non-monopolistic businesses or the private businesses. So that's where the valuations get affected. The growth also tends to be a bit slower, obviously connected to the power segment growth, which has been slower in that sense. But here, as you said, rightly said, it's a monopoly business that will continue to do well. So in terms of steady growth, if you're looking at, yes, I think Power Grid is a company which offers you that, and so we continue to like that. In terms of valuation upside, we are looking at about 15% kind of upside even from these levels, and I think the growth trajectory is set to improve given the kind of capex plans which they have outlined for themselves over the next few years. So clearly there is growth. The growth is also likely to slightly improve that. So we will have some valuation improvement going ahead. But as I said, it's more of a steady growth company. One can expect about 15% kind of return from that.
Right. Sameet, Chavan, just want to take three stocks with you. One was EMMBI Industries. If you look at that one, because it's got a pretty awesome chart. And also Power Grid for that matter. Here also the chart is exceedingly clean.
I'll start with Power Grid. Yes, we have been maintaining our positive bias in the stock since last couple of months. This has been a steady outperformer. We have seen a gradual up move in last couple of months. Now if you look at the daily chart, the stock has been consolidating in a narrow range, 175 to 182 is the consolidation range. But if you look at the price action along with the volume activity, we expect a breakout to happen, and it looks like a bullish flag in the making. Thus, going by this pattern, we expect at least a move towards 190, 192 in Power Grid. So it could be a buying opportunity for momentum traders, and stop loss would be around 172 for Power Grid.
Shrikant, just coming back to Lawson and Tubro, L&T, first of all, just on stock performance, Shrikant, the stock's done nothing. It was about 1,500 a year ago. It's still at 1495. So most investors, if they sat with the stock, got nothing out of it. And now I hear increasing concerns about L&T not sticking to its main business, but doing other stuff like financial services and technology and what have you. What are your thoughts? Because people don't usually like closed-ended mutual funds that double up as companies. Your thoughts on it, just in terms of the discounting they get, and two, why has the stock not moved?
See, L&T always gets the valuation of a capital goods company. I don't think the market at least is pursuing it as a diversified kind of play or as a holding company. I think if we start pursuing that, then I think there is a risk of that discount which you're talking about getting played out. The fact is that yes, they are diversified into different businesses, but these businesses they have built that, and that's what is probably we're seeing. Whether it's L&T Infotech, whether it's L&T Finance, these are diversified businesses which are there. But the main core business remains the capital goods business, and in fact, from a broader perspective, it will continue to be one of the best places if you want to participate in the capital goods cycle. The fact is that the capital goods cycle has been very slow. So, in terms of order flows, we have seen company come out and maintain the guidance in terms of order inflows. But in terms of order flows, we have not seen that kind of traction coming to the order flows. We've seen some dip in the margins as well. So all these issues remain. Earlier there were concerns on the Middle East front where there been order cancellations or delays, which has also affected the performance. So in last 1 year, we have seen the stock go down substantially and then come back. It has only recovered back from the lows of almost nearly 1,100 levels. So clearly it has recovered from the lows. But yes, for the significant uptick to happen, we need to see traction in the capital goods space.
Sameet, on 4 stocks, if you can take a look at the charts: Bulgaria Industries, Tata Metallics, Adhunik Industries, and UCAL Fuel Systems.
Generally, we don't track Bulgaria Industries, but in last month or so, the stock has rallied from 210 to 220, and in last 2 days, we are seeing a very good volume activity. But we don't see any price structure as a wherein we can recommend a trade. Those who have bought it at lower levels, they can probably shift their stop losses higher. 320, 325 seems to be a very strong support. And considering the ongoing momentum, this stock can continue this up move towards 370, 375. But fresh buying is not advisable. Those who have bought it, they can hold. 320, 25 would be a revised stop loss. As far as Tata Metallics is concerned, we have seen a sideways range in last 2 weeks in the stock, but the overall trend-wise, the stock has been maintaining its upward trend. For 400 seems to be a strong base in the near term, and today we are seeing a good traction in this counter with rise in volumes. Thus, going by the daily as well as weekly chart structure, we expect the stock to extend this move towards 475, 480, which we are seeing as a next resistance.
Shrikant, another stock that you had here was Coal India. Now, you know, I know when the markets are up, everybody thinks there's a lot of demand for coal, and the markets are down, people believe there's no demand. But we know power plants, and especially what Coal India produces, is only fit for power plants. Obviously, they don't produce the high-grade coal. It's just not available in India for steel and cement. But I wanted to ask you, is Coal India being underrated by the market, or is it being discounted, given the fact that just about most of the power plants here are really coal driven, and you know, if you can get it cheaper in India, all you need to do is to blend it with some higher grade coal and run it in the furnaces. Has the market missed that point? And also, they're generating thousands of crores of cash. At some point, they have to pay the government that cash, which means you as a shareholder get that cash also.
Right. I don't think the market is missing that. If you look at from a valuation point of view, the market is given on the cash holding which it has, plus the fact that it generates a lot of cash. The market typically gives valuation to companies which are growing. I mean, if you look at across the board, across sectors where valuations are high, it is only for companies where they have been able to deliver consistently high growth, either or both in terms of top line and in terms of bottom line. You know, these companies are getting a premium. So Coal India or companies which are very strong in terms of financials but are not able to grow their business substantially are not given the kind of valuations. They typically tend to trade at the dividend yield kind of valuations, maybe at a 3% dividend yield. That is a dividend yield which is attractive for value investors, and that's what it remains. Also, there's been a constant risk of further dilution by government in Coal India. That has also been a risk where the government has been constantly diluting about 5% stake. As soon as there has been some price rally in Coal India, because it's been an easy, money raising option for government through diluting Coal India stake. So that also remains a risk. So at higher levels of 340, 350, I think because the government looks at the option to dilute the stake in Coal India, so I think the interest obviously comes down from investors. While at 300, it looks a great valuation. At 330, 350, 350.
Right. Sameet, we've seen some move come in stocks. Sometimes maybe I can just call them, technical bounces that just don't survive. So Bhushan Steel, Uttam Galva, GVK Power, sometimes they give you this 11-12%, but we're looking at stocks that have just collapsed and are at the bottom of the ocean. Do you make much out of a move in stocks like these?
See, to be honest, we do not track this counter because, as you rightly said, these are just technical bounces, and these stocks have been laggard not for many months; they have been laggard for many years now. So we would avoid any positive up move in the stock. If we talk about Bhushan Steel, it's been just consolidating in a range of 46, 34 since last many months now. In case of a breakout happening beyond 46 also, we won't advise aggressive trades in this stock. In fact, those who have stuck at higher levels, they can look for decent bounce to exit from this loss-making positions. So as far as Bhushan Steel is concerned, 40 is a support level and 46 would be the near-term resistance level.
Yeah, I wanted to take Mangalore refineries, if you looked at it, Shrikant. One of the reasons I wanted to bring out, the trend was very strong. The stock went right to 89, but it kind of broke after that because I don't see any support in this stock till maybe even 64, 65. What does one do if you're sitting with Mangalore refineries?
Yeah, I think if you look at from an investment perspective, you want to be with a more composite kind of company like BPCL, HPCL, and IOC rather than be with a plain refinery, because refinery margins have per se not been moving. If you look at Singapore refining margins, they've been going down. So in that sense, you will live with the uncertainty of plain refineries where they will not have that, and especially companies which are subsidiaries of larger OMCs or oil companies, they may not be able to make that kind of money unless the refining margins are very high. So I would think, though we like the MRPL from a long-term perspective, I think one would be better off being with BPCLs, HPCLs and IOCs of the world than be with MRPL.
Your quick thoughts, Sameet, on Biocon. It has one of the cleanest charts I've seen, and actually, if I may use the word, the angle of ascent seems to be even growing sharper and sharper. Essentially, if you want to buy the next lot of stocks, it comes at a much higher price, maybe low floating stock. Your thoughts?
The stock gave a spectacular rally after confirming its breakout beyond 480, 485 in the month of March. Since then, it's been just moving northward. Clearly, it's been just defying gravity and trading in an uncharted territory. We have been advising our client that you should not short this counter. In case of any meaningful dip, that could be a buying opportunity, but the dip never came and it's been just rising. So what we have been advising is just avoid shorting at current level or just wait for clear signal. Rather than at current level, you should ride this trend. Those who have bought it at lower levels, they should now shift their stop losses higher. The base is now shifting higher. Earlier it was around 660, 680. Now the base has shifted higher to 800, 820. So those who have bought it at lower level, they should now trail their stop losses higher, 820. And on the higher side, this stock can, at least in the near term, can give a move towards say 915, 920.
Shrikant, we may have just time for one more question. I wanted to take your views on the oil marketing companies. If you were going to pick just one, would you stick with the BPCL or an HPCL, or would you go down the line on Chennai Petros or more the standalone refineries, Mangalore, and what have you?
See, for taking a view on standalone refinery will be more of a trading view based on how the performance will be of refining margins from a near-term perspective. But there is value, there is no doubt. I mean, if you look at from a turnover perspective or from a valuation perspective, yes, Chennai and MRPL may look valuation-wise attractive. But then these valuations, there's a risk also of refining margins going down and or inventory losses eating up the entire profitability in the next quarter. So these things will be difficult, but I think from a more medium to long-term perspective, it will still be better to stick to BPCLs and HPCLs.
Okay, so pretty much that's all we have today, but let me just walk you through the overall market. 2-3 things are happening. One, of course, financial stocks are very strong. Then you have some outliers like Shalimar or what have you, but sugar seems to have made another move upwards. Now, how strong it is, we'll just have to see, because many of the stocks have ran into a freeze. Also, textile stocks once again. So the stocks that were really participating in that bigger rally when it was going on, many of them are back into action. Apart from that, maybe in a market like this, you want to stick to momentum. There's no points for guessing. Let's look for value. This, that. Just go with the trend. That's if you're comfortable with trading, as far as that's concerned. All right, Sameet, Chavan, thanks very much for joining us from Angel Stockbroking. You walked us through the technicals, and Shrikant, always a pleasure to speak to you, Vice President at Motilal Oswal. On Corporate Eye, of course, we have the Chief Financial Officer of Snowman Logistics. You can check out what's going on there in terms of the goods and services tax. Is it going to change something for them? Is that business up or down? But for now, with 8680 reading on the Nifty, from our producer Deepa here, and Smita and her team, and from me, thanks very much for making us a part of your lives. Goodbye.